Hi, how are you guys? Okay, today's topic is IFRS 5 NCA held for sale and discontinued operation. Well, first we will discuss NCA held for sale. This part. Okay, it means this is the definition as per the standard IFRS definition. Held for sale is an asset whose carrying value is principally recovered through sale, not from continued use. There are two ways to get the benefit or income from the asset. Either you sell it or either you use it. But in this case, it was previously, like we can say that we were having a non-current asset, but now we are our intention is not to use it. Our intention has been changed. So our intention is to sell that asset. So if your intentions has already been changed, then in that case, standard says then you can consider this asset as current asset. You can consider this asset as non-current asset held for sale. It means you are holding this asset for sale. So your intention is not gonna use it. Your intention is to sell it. But the thing is, when standard gave us this option that you can consider your non-current asset as a current asset, then the creative accountant or the fraud accountants, they think of a fraud. They said, why don't we change the non-current asset into current asset near to the reporting date to increase our liquidity ratio, to make it correct. So and when the reporting days is over, we can reconsider this from current asset to non-current asset. But the standard, after this, when the standard realized that people are taking advantage of this standard, or they are starting misusing this standard, then standard gave us a criteria. So this criteria, there are two criterias, 1 and 2. There are two criterias you need to meet in order to consider any asset into non-current asset held for sale. Those conditions are: asset must be ready to sell in its immediate condition. This is your first criteria. That if I have a business, suppose if I have a factory which prepares iPhones, I have a machine. I said I want to sell this machine, and I can consider this held as a held for sale. So that machine is now a current asset for me. But I need to meet these criteria. If the machine must be ready to sell or within its condition, immediate condition. So this is the condition is that it's ready to sell. So the first thing is, asset must not be with lessee or on lease. Assets must be with you. Asset must be with you and ready to sell. You cannot say to the auditor that I consider this asset as held for sale, but that asset is not with me, or it is not on my name, it is on lessor's name, or the asset is with the lessee. So if that asset is on lease, it is not even your property, it is not even your ownership, it is not even your asset. That you cannot consider that asset for and non-current asset held for sale. The asset has to be yours. The asset, you have to have the asset. You have to have the possession of that asset. The asset must be with you in order to sell it. First condition. Second, no repairs due. If I want to consider one asset into non-current asset held for sale, that asset must be in working condition. It must not be having any repair due. So you cannot tell your auditor that it is not working now because we need to do some repairs on it, so that you cannot consider any asset. Third, it is a surplus asset, then no need for substitute. If you have two machines, you have two non-current asset. Even if you sell one, and then you can suppose you have three assets, you have three machines. So if I sell one, if I consider one as held for sale, I can use two machine to run my operations, so that's fine. But if you have one, and you need to show the substitute actually, if you have only one machine and you are taking operations with that machine, then you cannot consider that asset as held for sale, because if you gonna sell that particular asset, then how you gonna run your operations? So you cannot run your operations. So you have to satisfy the auditor that why you are considering this as held for sale, because I have a substitute, or this is not an operational asset. The second big condition is sale is highly probable. You have to sell, it is must be in your mind that you want to sell this asset. The management committed to sale. The fair value of the asset is calculated. It means you must have calculated the fair value. Suppose you say that my asset is of 100,000, I want to sell this asset on 100,000. Management has started locating buyers, like management must have done the advertisements. Management must have told all the staff that we need to sell this asset. You have to tell everyone that you are selling this asset. These are the condition. If you meet this condition, then you can consider this is held for sale. If management has to sell and the fair value is calculated, if you suppose you have 100k asset, market value is 100,000, but you say I want to sell in 300k, it cannot be possible. No one will buy 100,000 machine with the 300 price. So if the price is of 100,000, you must consider that price only. You must compensate with that. And if say there is a market culture that is fine. If it is a market culture that you got 130,000, and it's a market culture, you give more price, and then after bargain you say okay, I will give you 100,000. So it is okay, but this is not okay. This is not okay. It means your intention is not selling. You don't want to sell it. That is why you are asking a high price. This is the main point now. This is the very important point. The sale is expected to be completed within 12 months of its classification. It means if you classify your non-current asset today, you must have sold within 12 months. If you're classifying your asset that held for sale in July, so by next July you must have sold this asset. You must have sold this asset. And there is no U-turn. You cannot say, oh, after considering non-current asset as held for sale, then there is no U-turn. You cannot turn it back. You cannot say, oh, I don't want to sell it now. Okay. The if not sold in 12 months, if you consider this asset as held for sale, and within 12 months you have to sell this. If it is not sold more than 12 months, then there is two conditions. If not sold for uncontrollable factors, but it is still meeting the criteria. But the thing is, the uncontrollable factor means that because of the coronavirus, the recession came in, so nobody will be willing to buy, or it is really hard to find the buyers. So you cannot find the buyers within the because of this pandemic. So this is uncontrollable factor. So standard says if you are unable to sell your asset within 12 months because of uncontrollable factors, it was those factors was not in your hand, so that way you can still keep that asset as non-current asset held for sale. But if it is not sold because of controllable factors, those conditions were because of you don't want to sell it, so in this case you have to revert it back. Non-controllable factor means that buyers are coming to you, but you are not entertaining them. The buyers are willing to see the asset, the buyers are willing to have a meeting with you, but you are not giving them a time. So in this case you cannot say it's you cannot you need to revert it back to non-current asset. You cannot keep it as a non-current asset held for sale. So this is the point. We calculate depreciation on non-current asset. When we say consider this, when we classify this as non-current asset held for sale, it means we are converting into current asset, and we do not depreciate our current assets. Like we do not depreciate cash or bank. We don't depreciate trade receivables, inventory. We don't depreciate. So it means if you classify your asset into non-current asset as held for sale, it means you are considering this as a current asset. Then from the day it is classified, we will not calculate any depreciation. So no depreciation from classification. Okay, let's do the example now. Suppose from 1st January, the building, you have a building of 50,000, and till that point the accumulated depreciation was 10,000. And on this point, on 1st July, on this point you consider this as a non-current asset held for sale. So till that point, it from here till here, from January till June, this was for 6 months, and this was considered as non-current asset. In this period it was a non-current asset, so we do depreciate it. So how we will calculate depreciation? 50,000 multiplied by 4% multiplied by for 6 months, it means 1,000. Depreciation for 6 months was 1,000 for the first 6 months, because first 6 months we consider this as a non-current asset. Here we classified it as current asset. So from July 1st, no depreciation. We consider this as a current asset. We consider this as a non-current asset held for sale. What we gonna do? 50,000 was cost minus accumulated depreciation. Previously it was 10,000. This 6 months it was 1,000. We will say 11,000 is our accumulated depreciation. So minus accumulated depreciation, it means your asset net book value is 39,000. On this point, on 1st July, your depreciation will be, your net book value will be 39,000. What you gonna do in this point? You gonna what will be the double entry? So you will say hi to, you will create or you will recognize this as a non-current asset. So debit asset, non-current asset held for sale, debit by 39,000 and credit by, we will credit non-current asset or PPE. We will credit PPE, which is a non-current asset, 39,000. So it means we will say bye bye to non-current asset or PPE, and then we welcome the non-current asset held for sale. This will be the double entry. Now IFRS 5 accounting. From here we will start our IFRS accounting. So IFRS 5 says record your assets lower of carrying value or fair value less cost to sell. Why we did not use value in use? Why we did not use value in use? It means we have no intention to use it now. No intention to use. Our only intention is to sell this asset. That is why we are not using value in use. So we record this asset lower of carrying value or fair value less cost to sell. So any cost which is associated with the sale. Suppose carrying value was 39,000 as per the question here. As per the question, we have a net book value of 39,000. Suppose the fair value was 31,000. It means the maximum benefit that asset will give you is 31,000. But your bank, your SOFP shows 39,000. It means you're doing miscommunicated with your shareholders. It is not a fair price. The maximum benefit you are going to get is 31,000, but you reported it as 39,000. So you have to show the impairment. So 39,000 minus 31,000. So it means 8,000 is impairment. How the double entry will be, how we will say double entry. So impairment, profit and loss, debit expense. When expense increases, it debit. So profit and loss debit by 8,000 and credit by non-current asset held for sale, 8,000. This will be the double entry. You need to reduce your asset. Asset is reduced, that is why it is credited. Let's make profit and loss account. What things will go to profit and loss? First, depreciation. Depreciation we have calculated here. For first 6 months it was non-current asset, so we calculated depreciation. So the depreciation will go 1,000 as a depreciation and impairment 8,000 impairment, this one. So this will be your profit and loss. as this name, there were two names: discontinued operation, held for sale, and discontinued operation. Let's discuss on discontinued operation. Anything which is disconnected, like you were having two different components, and then now you are closing one of them. Component of entity. What is component of entity? It means it is a like segment, it is a separate segment. What makes a component and a like separate component of the entity, which revenue, whose revenues, cost, and cash flows must be separately identified. Whoever, if we are unable to identify the cash flows or revenue or cost of a particular asset, we cannot say it's a separate entity. If we can calculate their revenues, if we can calculate their cost, if we can calculate their cash flows separately, then only we can consider this as a separate component of the entity. Suppose if I have iPhone department, they make iPhones, and I have a motors business, they are making cars. So I can identify their revenues, costs, and cash flows. I can easily know that I got, this is my cost, this is my profit, this is my revenue, this is my cash flow for car business, and this is my revenue, cost, and cash flow for mobile phones. So these are two different component. If I have three machine, suppose the second example is, if I have three machine and all three machines are making iPhones, so I don't know what machine is giving me how many revenues. So I cannot identify their exact revenues. If I cannot identify their revenues, I cannot segregate them. So for me it is one unit. I cannot consider this a separate entity or separate component. This point is really important. If an operation is discontinued in current year, it must be reported as discontinued in the last year. It means if I am discontinuing one operation here, then I need to show in the last year as well. Suppose I need to separately I need to show it to the shareholders, so they know that this is discontinued operation, so they will not start expecting more profit or more dividend from discontinued operation. Suppose from the continued operation, I in 2008 I made a profit of 3 million, and in 2009 I made a profit of 7 million, and discontinued last year, the discontinued operation gave me the profit for suppose 12 million, and this year they made a profit of 5 million. So I need to show it separately, so the shareholder will not expect more dividend or more profit from discontinued. They knew that this is going to be discontinued. There is in the next year there will be no department for this. So you can see previously this was giving me more profit than this year. That is the why we are discontinuing it, because it is not making me good profit. That is the only reason we consider this as discontinued. So this is the way you make profit and loss account. So first, profit and loss, this is your heading, continued operation. So sale minus cost of sale, this will be your GP, and then after admin cost, overheads, and everything minus, this is your profit from continued operation. Then you will write profit or loss from discontinued operation. Then you're gonna add these two, this and this. You will add this and you will calculate as a total profit. So this is the way you can see continued operation, discontinued operation separately, and this is your total profit. So this is it for the day. So please do subscribe my channel, tell your friends to subscribe it. I will complete F7 in maximum two weeks or so. So please do keep one thing in mind. I have different playlist in my YouTube channel. You can see other videos as well on my channel. There are few more miscellaneous videos like when UK places or some other Posh videos, Dubai videos. So don't get confused that this is no longer a ACCA lecture channel. Do not unsubscribe it. It is best if you keep watching it, and it is best if you go click on my playlist. Do not if you are not into other videos, you can watch my channel on if you see my playlist. I have F7 Urdu, I have F7 Hindi, I have F7 complete course in English as well. So please let me know what standard or IFRS you want me to make a video on, so I will complete that one too. So keep watching my channel. Thank you. Bye.